Having reclaimed record territory after an absence of 15 years, the US Nasdaq Composite has assumed a leadership role, and in dollar terms is now outperforming the broad Eurozone market for this year. The Nasdaq's gain of 7.5% this year comfortably eclipses the 2.9% rise we've seen for the broader S&P 500. And while US investors have poured money into Eurozone shares and been rewarded by double-digit gains in local currency terms, the weaker euro has actually translated into only a rise of 6.3% in dollar terms for people who bought the FTSE Euro First 300 from the US. So why is the Nasdaq moving higher? One reason is that the current earnings season has provided further evidence of slow growth for many companies. And companies at the forefront of innovation such as Apple and biotech firms are by contrast seen offering the potential for dramatic growth. So in a sluggish economy, betting on growth companies remains a strong draw card for investors. Is the Nasdaq now in a bubble, given we are back at the dot-com era peak? Well, looking at valuations, we can see that they are notably well below the mania that typified 2000. And while the market last week was buoyed by upbeat earnings from the likes of Microsoft, IBM and Amazon, the Nasdaq is not just about old tech firms. We've seen diversification into other areas, notably healthcare, consumer services and financials, all of which has powered the Nasdaq past its dot-com bubble closing high. So what now for the Nasdaq? Since bottoming at 1300 during the financial crisis, the market has risen 300%. It's a tremendous rally. However, on an inflation-adjusted basis, the benchmark significantly trails its internet boom peak. The question now for investors is whether they want to keep on rotating into tech and chasing momentum growth stocks after a period of consolidations since late February. With the Federal Reserve seen signaling it will stay on the sidelines for now at this week's policy meeting, the Nasdaq may very well push on higher from here.